How much would that suck? Condo insurance rates going up 20% year over year. Not a new concept, new to here in Ontario, but something already being experienced in places like Vancouver. Good morning, investors. Bradley here from Watson Estates, and you're listening to the largest, fastest growing podcast for Toronto real estate on iTunes, Spotify, and Google Podcasts. Today, I want to start off talking about the mismatch of supply in the Toronto real estate market. Where do we need more housing? Where is there maybe an imbalance? What features as well make a condo more desirable, but also far less desirable in today's new COVID climate? And how do we know fixed rates are about to go up? These are some of the things we're going to talk about today. And just to kind of start us off, I saw an article from CTV News. Ontario Premier defends spending $2.5 million on bracelets that beep if users get too close. Apparently that's a good use of tax dollars. And so I thought today we're going to have some fun. We like to keep it light. We like to enjoy ourselves. And we're going to crack the occasional jewelry joke along the way. I mean, my wife's been complaining that I never buy her jewelry. But I didn't even know she sells it. Before Valentine's Day, she was leaving me these jewelry catalogs all over the place. So of course I'm a nice guy. I bought her a magazine rack. So we're going to have some fun today. But if you guys could, please hit that like button, subscribe to our channel. If you're listening on iTunes or Spotify, download the last 5 episodes. And if it turns your mood ring purple, please follow our investor list. We like to send out off-market and small to mid-sized apartment deals, and you can get involved and stay in the loop. It's free. I guess some people ask, do you have to pay for this? You don't. You're welcome. All right, here we go. We're going to start off discussing the mismatch that exists in the Toronto real estate supply. Where are we currently struggling? Where do we need more development? Well, to start this conversation off, I saw a post from Mike P. Moffat on Twitter, and it really discussed a real risk to our market, which is the misalignment between immigration and housing supply. This is the post. I say this as someone who favors high immigration targets. We cannot continue to have a misalignment between our immigration and housing policies. Growth in family housing supply must keep up with, if not exceed, growth in the number of families. I thought, you know what? That's a really good point. We're so fixated on getting our immigration numbers up, which is a good thing. And I agree, it's a good thing. But our housing supply and our housing policies need to stay in line with that. So all of that to lead into this conversation. Where are we maybe struggling? Where is this disconnect right now and a mismatch? Well, NowToronto.com had an article called "Toronto Real Estate Falls Behind on Building Homes for Public Transit Riders." Okay. According to a new housing market insight report from the Canadian Mortgage and Housing Corporation, over the past 3 decades, Toronto has built more housing within the city center. So they describe that as within 5 kilometers, where people can walk or bike to work, and far out suburbs where people can drive to work. But the real estate market dips way below other Canadian cities when it comes to building housing near TTC lines. Interesting. This is really what this conversation is all about. They break it down into 3 categories. There's the active cores, which is people that can go by feet, by pedaling on their bicycle. Then we've got these transit suburbs, which is obviously the point of focus for this article. And of course, the auto suburbs. And that's the way CMHC has broken it down. And I'll tell you, they've got these little charts showing development. It compares against Montreal and Vancouver, but there's absolutely between the 5 kilometer to roughly the 30 kilometer, actually it looks like more the 20 kilometer range in Toronto, a serious shortage of supply, a serious issue. But why is that? Well, the report assumes housing starts in these transit suburbs remain low because available land is costly, number 1, and 2, there's minimal incentives to build condominium apartments. Very interesting. The report, this is from another article talking about the same Toronto stories. The report also pointed out another interesting pattern that's apparent in Toronto and Vancouver, which is the relatively low level of construction in the wealthiest areas. This is likely due to municipal rules and the quote, "not in my backyard" opposition, which may have constrained housing supply. There's the issue. People don't want these, whether it's a wealthy or regardless, along these transit lines, there's a real pushback in development, which has really caused a problem when we compare Toronto against other major cities. Now, how convenient, right? You get these rude, damn rich people. My goodness, we're just trying to build housing and they just laugh at us. They'd be like, "Yo, mama's so fat that her favorite piece of jewelry is the food chain." It's true. I'm sorry. Ugh. Anyways, why do we see what in Toronto the market right now? So I thought, this is a great place to give a little bit of an update. We like to give weekly updates on what's going on in our market. And I thought, what better place to paint this picture than to look at the months of inventory for the 416 housing types? Well, detached is at 1.5, which is low, by the way. Let me set that as a context, but it's the highest. Still very low. Semi-detached, 0.8. This is in January. Row house, 1.1. Condo apartments, 1.4. Condo townhouses, 0.9. In fact, if you look across the entire GTA in the condo space, because some people think, oh, condos, ew. I'll tell you, the average condo in the GTA is now below 1 month of inventory. It's dropping super quick, which again is a leading indicator to prices going up soon. But when we look specifically in the 416, maybe it's a coincidence. Maybe something's happening. I don't know what the heck. I don't have any alternative suggestion other than the condo market is now hot. But they have a 41% of 416 condos sold over asking this past week. We've been mapping this out week over week. Only a couple weeks back, it looks like 19, 20%. Now we're over 40% are selling over asking. It's heating up out there, guys. If you're looking in the condo space, you probably have experienced that like some of my clients. But when we come back to this question, I want to discuss also this idea of a bubble, because a bubble is a very easy word to throw around. Well, assuming we're in a bubble, let's say, would it just burst or would it be more of a slow collapse? And I saw a really good post from Ron Butler on Twitter. He says this: do real estate bubbles burst or just slowly collapse? No charts, no stats, not from me, just watching it unfold, listening to clients and realtors, it may just quietly fade. Interesting. Buyers are starting to give up, reconsider, pause, take a break. Not all of them, but some are. Maybe you are a realtor, maybe you're an investor, and you've recently been in multiple offers with well over 20 offers. That can weigh on you. And so the question is could that be the straw that breaks the camel's back slowly? Slowly breaks the camel's back. But some people may suggest now is the time you just throw in the towel. Screw it. Screw real estate. It's a bubble. Right? Whatever your explanation is for it. But we actually had stats that came out that show people are generally happy with home ownership in Canada. Who would have thought? This was according to a Treb Year in Review report that recently came out, speaking specifically to stats from Mortgage Professionals Canada that said 90% of Canadians were happy with home ownership and the home that they purchased. 8% said they were happy with home ownership, but not the home. So all in, 98% didn't regret the idea of home ownership. And that we see in our country. Canada and Canadians love real estate. Home is where the heart is. Unless you're like my wife and you have like one of those little heart necklaces. She has a picture of me and my daughters in it, which I think is cute. I always wanted to be more independent. So what features make a condo more desirable and less desirable? Because people are trying to pick, where do I go? What comes next? If there's going to be an opportunity in condo space, where will it be? I want to start off talking about one of the more desirable features that people are looking for in condos today. Comes from a blog TO article. So many Toronto condos now come with their own co-working space. Co-working space? What? You're not allowed. We have to social distance. It's very strange how this all works out, but listen, follow with me here. More and more condos are being developed in Toronto with their own co-working space. While gathering and working communally may be discouraged right now, it could be a smart move as working from home might be the wave of the future. Interesting. With the co-work space, we saw an increased demand for open workspaces well before the pandemic. Whether it be for professional meetings and clients, students who need quiet places to study, or even for parents and wanting their kids to get some damn homework done outside their suites. Get out, go work, right? Here's some examples, just to give you a few scenarios where it seems to be a priority of a developer. The Saint in Old Town, developed by Minto, will have 52nd floor dedicated towards a co-working hub with Wi-Fi, kitchen, green roofs, and a connection to outdoor terraces, as well as ground floor co-working lobby lounge as one. Altera 28 Eastern condominium project in Corktown, another. They modify the use of the planned courtyard terrace through strategically placed landscape buffers, interesting, which were able to transform the outdoor area by creating several individually spaced quiet seating or private work from home pods. They actually connected a bunch of like plugs so you could work. Interesting. Another one. Empire Key house developed by Empire Communities. Comes with Wi-Fi, boardroom, and custom coffee bar. We got Developer Center Court with a 47-story condo called 55 Mercer that is slated to be over where the old Wayne Gretzky's was. And it'll feature a 9th-floor co-working space with leather booths, a boardroom table, and a kitchenette. Why are they leaning in this direction? Are we not supposed to be social distancing? Fun fact, apparently working from home is a thing. And so developers are putting that as a priority because that is what will be desired more likely than not in the city post-COVID. But what is not desirable? What are we noticing as a trend? Are people like, oh, what the hell with that? I'll tell you, luxury hotel condos. Listen to this article, narcity.com. Condos for sale in Toronto's luxury hotels are as cheap as $369,000 right now. We won't get into the details of any specific unit, which I try to avoid in general, but residential units at luxury hotels right now could be dropping in price due to the economic toll of the pandemic. Fun fact, there's actually 2 different types of condo hotels. The first one is with the actual units inside the hotel. Some buildings like One King West or the Cosmopolitan have condos that are designated or designed for permanent living alongside regular rooms. But then we have the second type, which is really attached to the actual hotel itself, right? We've got Ritz-Carlton, Shangri-La, Four Seasons, where the owners can actually use the amenities. But it's funny that people aren't interested in sharing amenities with tourists right now. Don't know if I understand that one. Why are they dropping their price? Well, hotel condo units, along with other luxury properties, quote, can take the biggest hit when the economy isn't doing well. Because these units already have a very high price per square foot and maintenance fees, they tend to appreciate slower than less exclusive properties. Interesting. So COVID has been a killer for hotel condos, even if they are luxury. And you know what they call a necklace on a serial killer? An accessory to murder. And if it wasn't already too expensive, watch out. Listen to this Mortgage Broker news article. More bad news for owners of condos in Ontario. Just in time. We need more, right? A new report by rate comparison site lowestrates.ca has found that condo insurance rates in Ontario are rising at what many would consider an alarming rate. Listen to these numbers. On average, condo insurance prices in Ontario were 8% higher in the end of the fourth quarter than they were the prior year, and 3% higher compared to quarter 3. So they're rising very quickly. And in Ontario, that seems a little bit odd, but this is actually happening right now in BC. And if the same rate of change takes place in Ontario, they say we could see a 20% year-over-year increase in condo insurance costs not being out of the question. How much would that suck? Condo insurance rates going up 20% year over year. Not a new concept, new to here in Ontario, but something already being experienced in places like Vancouver. And you might be asking, why? Why are rates going up so high? Well, there's a few reasons. Number one is the cost of extreme weather-related insurance claims that have been going on right now, bumping things up, bumping up the cost, combined with the number of companies willing to insure condo buildings dwindling. Apparently, people don't want to insure them as much. Plus, a building's age also plays a factor, and there is no shortage of older condo developments in Ontario. So I guess not everything gets better with age. Then again, some things do. My daughter said she likes the jewelry my grandmother wore, so I'm getting her a Life Alert necklace for Easter. All right, we're having some fun, guys. Please hit the like button, subscribe to our channel if you're learning some stuff. And we're going to get into one of my favorite categories, the hot topics. Hot topics. Here we go. Blog TO, first one of the day. Toronto's next modular housing locations have been revealed. There have been 2 so far. We've talked about those on the show. And I anticipate there's going to be many, many more because the government is spending a ton of money to have these done. But the locations of 2 new developments have been announced. The first is at 175 Cummer Avenue, which is a city-owned 60-unit permanent housing about to be built. The other is a new modular housing slated for the free parking lot at the corner of Trenton and Cedarvale Avenue in East York, which is going to have 64 units and it's going to be 3 stories high. Not that you care about any one of these units, but it's interesting that this trend continues. We're going to see more and more affordable housing taking place. Let's just hope that these affordable housing projects turn out to be classy. Classy, that's key, right? Not a place where shady people sell jewelry made out of crystal meth. You know, that actually sounds pretty dope. All right, another fun fact, hot topic for today. Apparently, we're not having a municipal land transfer tax increase on homes worth $2 million. We talked about how that was a bad idea. There's a big lobby happening from the city of or from Toronto Real Estate Board, and they were successful in vetoing that decision. So Toronto, all I can say is enjoy your next property tax increase. We're going to share that cost. We can't just rely on rich people to pay for reckless government spending, right? For the same reason you never purchase jewelry based off a photograph. It makes you look 2D pendant. 2D? Stupid. Blogto.com. This man created a website where you can review your landlord in Toronto. Let me just say, we've seen other websites where landlords share information on tenants, and it's got a lot of backlash. All of a sudden, tenants got an idea. Hey, why don't we track our landlords? And all of a sudden, it's got open arms. Great idea. Fantastic. Woo! Wish I thought of it. I do think it's great. I just think that there's a double standard. If you've ever wished you could get the scoop on your landlord before signing a lease, today's your lucky day. Drew Mins created Good Neighbor. That's what it's called. Check it out. To disassemble the power imbalance between tenants and their landlords in Toronto's renting scene. It's a free website. It was launched in January 2021. It's only in Toronto, but who knows? Who knows where tech can go? You get started in Toronto, you can make it anywhere. Recently, tenants have had some sway, but I would suggest it's probably not for long. And maybe websites like this gives you a little bit more support, I guess. I mean, when we look at rental supply right now, what's active, we see week over week, it's continuing to decline. We've been tracking this for the last few weeks. Right now, it sits around just under 1,300, but we've seen it up to 16,500. And every week, it seems to be kind of coming down. As that happens, will months of inventory drop? More likely than not, and the competition for rental spaces will pick up. Hopefully not like before, but potentially. Also, another BlogTO article, tenants in new Toronto condo complex told not to expect hot water at all time. You can't be sure of anything, I guess death and taxes, except the wealth transfer tax, the 2%, 200, oh my gosh, I'm losing my train of thought, the $2 million tax. Other than that, can't guarantee anything, not even hot water. Not even hot water. Topico's Eau de Soleil condos from Lakeshore Boulevard said they have spent much of the past year plagued with issues. And they're like, you can't expect hot water during peak hours. Come on now. What a bad expectation. What is this, a first world? Oh, thestar.com. Investors who lost millions launched petition calling for federal attention on Fortress deals. If anyone's not familiar with the Fortress deal, that was a big problem. 14,000 investors across the country, about 50 developments nationwide between 2008 and 2018 got royally screwed, and they're trying to fight back against this white collar crime, right? There should be a hierarchy of thieves. Really. Let's face it. Like people who rob jewelry stores and banks, they're pretty bad, but people who rob bakeries, they really take the cake. All right, let's get to our last topic here. How do we know fixed rate mortgages are about to rise? Maybe you're like, what? They're going to rise. Yes. Here's how we know. The 5-year Government of Canada GOC bond yield surged higher last week, and that means our 5-year fixed mortgage rates are on the way up. In fact, I'm surprised they haven't risen already. This comes from a Move Smartly article called Canadian Fixed Mortgage Rates Are About to Rise. And they talk a little bit about this. Bond yields have been hovering around 0.3 to 0.5 until last week when they shot up to 0.65. The only thing that has been holding lenders back is stiff competition. No one wants to be the first to move higher. Regardless, the dam, they say, will break very, very soon. Something's got to give. Which reminds me, I got one of those anti-bullying bracelets today. I nicked it off some loser at the park. But why are rates going up? Why are rates going up right now? Well, let's talk about that. Well, the recent run-up is in response to a growing consensus belief that the U.S. inflationary pressures will rise more quickly than previously expected. Maybe it's a Joe Biden presidency. There's a ton of reasons. There's a lot of spending happening in the U.S., and most likely the run-up, though, will be temporary. We've seen that if you just look in the last several years, we see rates coming down, going up, coming down, going up. And we see that trend over and over again. Probably will be the case again here. But that doesn't mean that in the near term, we won't see rates go up. A small increase in 5-year fixed mortgage rates won't have much of a real impact, though, they say. I mean, if you look at today's borrowers, they qualify currently for a stress test at 4.79. So this increase won't really impact people all that much as far as qualifying. And more likely than not, if you're coming up to your 5-year fixed mortgage, you're probably way, way, way below the rates that you were before. If we see multiple, though, fixed rate increases in the months ahead, the relative of appeal of variable rates will appear, right? Because variable rates have to do with the interest rate set by the Bank of Canada. So if that changes, that's one thing, but the Bank of Canada has made it pretty clear they're not changing rates for some time. Will that steer fixed rate mortgages into variable rates? I don't know. Time will tell. And the more we see increase in fixed rates, probably. While fixed rate mortgages are subject to the bond market, investors' variable mortgage rates are priced at the BOC's policy rate, and as such are only moved by its steady hand. And that steady hand is wearing a bracelet that beeps when you get too close. Hope you guys had some fun today. Please hit that like, subscribe button, and join our investor list if you will. I hope you guys had some fun. I really do appreciate when you guys join us. And just some words of wisdom as well. I like to leave off on a positive note. Guys, you have a habit of not listening to your ladies. I know you do if you're like me, right? When they're giving you hints, we need to get ahead of that. Like my wife said, nothing would make her happier than diamonds. So guess what? I bought her nothing. I'm going to leave it there. I'll see you guys next time. Take care and keep it real.